Once the envy of the world, Japan's economy was unstoppable wholly, until it wasn't.
In the late 80s, Japan was the world's second largest economy, outpacing everyone but the US. But overnight, everything changed, and the miracle turned into decades of stagnation.
It began with post-war recovery. Japan rebuilt faster than anyone imagined. Efficiency and innovation made Japanese brands household names: Sony, Toyota, Panasonic. By the 1980s, Japan's economy grew nearly 10% a year, a global powerhouse.
But prosperity created a new obsession: land and stocks. Prices skyrocketed beyond reason.
Banks handed out loans freely. Everyone believed the boom would never end.
At its peak, the land under Tokyo's Imperial Palace was said to be worth more than all the real estate in California. In 1990, Japan's stock market collapsed. Billions vanished in weeks.
Real estate followed. Property values fell by 80% in some cities.
Japan entered what economists now call the lost decade.
Corporate giants downsized. Families lost homes. Confidence shattered. The central banks slashed interest rates, but people stopped borrowing.
Japan became the first major economy to experiment with near-zero interest.
But even free money couldn't fix it. Demand simply vanished. Businesses refused to expand. Consumers stopped spending. The government tried massive stimulus, infrastructure, subsidies, and bailouts.
Japan poured billions into construction, trying to rebuild demand.
But many projects built nothing useful turned. They just created temporary jobs.
People became cautious. Saving replaced consumption.
Economic growth flatlined. Inflation turned to deflation. In a deflationary spiral, prices fell, so people waited longer to buy, making things even worse. By the 2000s, Japan's economic miracle had completely faded.
Politicians tried to reform bank stagnates, but too late.
Hundreds of financial institutions collapsed or merged.
Corporate shame became a national symbol of accountability, but also despair.
Then came a new crisis: demographics.
Japan's population started declining. Fewer workers, fewer consumers.
By 2020, nearly 30% of Japan's people were over 65.
To compensate, Japan turned to automation, replacing people with robots.
But robots don't buy houses, cars, or clothes, and the economy stayed slow. Even after 30 years, Japan's stock market still hasn't reached its 1989 peak.
The lost decade became the lost generation. The world watched, learning hard lessons about bubbles, debt, and deflation.
Economists coined a new term: Japanification, slow growth, low rates, and deflation.
Today, Europe faces similar struggles. aging populations and low inflation.
Even China, once Japan's rival, risks following the same path.
Central banks worldwide studied Japan to avoid the same mistakes. When 2008 hit, Japan's story became a warning for the entire world. America adopted the same playbook: BFIFs, zero rates, stimulus, and patience.
3 decades later, the world still hasn't found a lasting cure.
But not all is lost. Japan is reinventing itself quietly. Innovation in clean tech and robotics could fuel Japan's next chapter.
Cities like Tokyo remain global symbols of resilience and discipline.
A new generation is learning from the past, focusing on sustainability over speed. Recovery may be slow, but Japan's quiet strength endures.
For 30 years, Japan's economy has stood still. But the world keeps turning.
The question now: will other nations learn before it's too late?